There's very few times where we have a bear market in M2. And why is that? Well, because under this fiat currency system, you can't have bear markets in the fiat currency supply because it would bring the whole system down. Wednesday, April 30th, 2025, Maneco 64, home of alternative economics and contrarian views. Well, today we're going to look at how the Fed is probably cornered right now because M2 in the US is breaking to new highs. I've also seen recently talk of global M2, but we're going to focus on US M2 because that's a very important indicator for prices. A lot of you know that I like to differentiate between money supply growth, which is itself inflation, and the CPI, which is not inflation. The CPI is just a measure of a basket of prices. And of course, we are, by mainstream economists, central bankers and politicians, the general public is ignorant to what inflation really is. And why is that? Well, because they're conditioned to believe that CPI is inflation, while CPI is a consequence of it. And why is that done? Well, because the powers that be don't want the public to know that governments and central banks, they're the biggest, they're the only ones that can really produce inflation. And they're the vampires sucking the blood out of your efforts to create, to your efforts when you work and you earn. They're sucking out 2%, they say, every year, but it's much more. And why is that? Well, have a look at this video here. I did almost 3 years ago now how the UK Office of National Statistics, at the urging, of course, of the government and the Bank of England, tinkered completely with the CPI data going back over 50 years. For example, that led to the average CPI from 1997 to 2020 in the UK dropping from 2.7 to 1.9. They changed history. And why do they do that? Well, because the Bank of England, under the policy of independence that was brought by Gordon Brown under the Blair government in 1997, was supposed to keep a 2% target. It couldn't really go above that. If they went above that, they had to write a letter to the Chancellor. But they've changed history now, and the Bank of England magically kept CPI, or what they call inflation, just below their target, and it's a complete, lie, really. You have to call a spade sometimes. So what I'm trying to say here, these are the forward-looking indicators, M2, M3. Well, M3 is not published anymore in the US, and this is what you need to keep an eye on. And I see trouble ahead. And why is the Fed cornered? Well, because they've waited too long, and now the economy is keeling over. And it's not me saying that. We're going to look at that. But before we go further into M2, I want to recommend a book that I'm reading right now. It's taking a little longer because I'm one of those persons who likes to read several books at the same time, which is frustrating. Eventually I do finish them. But this book that I'm going to recommend, even though it's a historical book, I think it applies almost 100% to what's happening today. The people that were involved in this book, they're not around, of course, but the institutions that they created They've morphed and they've created other institutions on top of it. So it's the same mentality is still around. And this is the book here, Hidden History, The Secret Origins of the First World War, Jerry Doherty and Jim McGregor. Highly recommended. So that's the Alfred Milner. I think that's King Edward, I think. And that's young Winston Churchill. So it says here, the history of the First World War is a deliberately concocted lie, not the sacrifice, the heroism, the horrendous waste of life, or the misery that followed. No, these were very real, but the truth of how it all began and how it was unnecessarily and deliberately prolonged beyond 1915 has been successfully covered up for a century. So what you will find is the same people behind, they call it the secret elite in the UK. That was back then, it was the British Empire. It was running the world still. They're the same kind of people that are behind things nowadays, and it doesn't matter. One of the things that I've learned already about this book is it doesn't really matter what government is in power in the UK or in the US. The foreign policy is always basically the same: more war, more inflation. And why is that? Well, because it's a way to keep control of the population. It's a way to rake in wealth. War, of course, is probably the most profitable human endeavor. Not that it is an endeavor, of course, it's a destructive and evil endeavor. But I highly recommend this book. You can find it Amazon, everywhere, I would say. And I have to thank one of the viewers for recommending this book. One of the viewers that I met in Zurich last November at a precious metals mining conference. I call him the Gnome of Zurich. And yes, very interesting. The Hidden History. Check it out. M2. So what is M2? Well, let's have a look at the definition here. Investopedia. So M2 is the U.S. Federal Reserve estimate of liquid assets, including cash on hand, money deposited in checking accounts, saving accounts, and other short-term savings vehicles such as money market funds and certificate of deposits. M2 includes the Fed's M1 figure, which historically only measured currency stock, checking accounts, traveler's checks, savings deposits. Once an M2 component were moved to M1 in 2020. So I want to show you a chart, and this is from Fred, the St. Louis Fed of M2. And you can see that it's always going up most of the time. There's very few times where we have a bear market in M2. And why is that? Well, because under this fiat currency system, you can't have bear markets in the fiat currency supply, because it would bring the whole system down. And why is that? Well, because when banks, or the central banks as well, issue loans, they create currency, and that currency never carries enough to pay the interest on those loans. So if you don't issue more currency, there will never be enough currency out there to pay the loans off. So they have to keep, it's a never-ending cycle, that cycle, which leads to where we're now, where the U.S. is $37 trillion in debt, public debt, while the overall debt of the country is a lot higher as well. The world has, I think, over 300 trillion in debt. And unfortunately, that's why M2 can't really correct that much. The only time, there's a few times where it corrects, like during the '08 crisis. You can't really see it here. It's just a blip now. But when that happens, when there's a crisis and it dips, you can be sure that the central bank will come in and do QE. The government will bring in fiscal stimulus, as they always do. And it doesn't matter who's in power. They all keep doing it. And you can notice that in 2020, because of this crisis we had, where people got the flu, M2 just exploded because they told people to stay at home and still sent them loads of money. The Fed did loads of QE, not just government bond purchases. They started buying corporate bonds. They did the direct QE that BlackRock recommended to them back in 2019 at the Jackson Hole conference, so that BlackRock would be made whole, and corporations as well, their securities would do well. So it was a massive stimulus of cash. It went straight to the consumer. It went straight to the markets, to non-treasury markets. And it led to an explosion of M2 from just around $15.5 trillion all the way to just below 22 trillion by April, summer of 2022. And then it keeled over. So you could argue that we had some deflation there from the middle of 2022 up until the end of, let's say, 2023. That was real deflation. And why did that happen? Well, because it led, this inflation of M2 led to rising prices. It led to the CPI going almost to 10%. It probably would have if they hadn't really tinkered so much over the years with CPI. If you look at how CPI was calculated in the 90s or 80s, actually the number was more like 15 or even 20%. So the Fed actually had to put the brakes on. Sometimes they do put the brake on. But as you can see now, the brakes have been taken off. And that's despite the fact that the Fed has held off continuing to cut rates. They started last year in September. But right now, they're not really playing ball in terms of cutting rates. But despite that, M2 is making all-time highs. As you can see here, as of March 2025, it's at 21,762.5 billion, which basically is 21.762 trillion. And if you look at 2022, the record there was in April of 2022 at 21,749,000,000. So we're making new highs. And this is just like financial charts a lot of times. You break a new high and the market continues going higher. And I expect M2 to continue going higher. And why is that? Well, because we're starting to see trouble in the market, not just in the markets, stocks and bonds, but also in the economy with, because yields have been relatively high. You have problems in the private equity sector, commercial real estate, and you even have, let me show you here, the CEO of JP Morgan, Jamie Dimon, a couple of days ago, he says the best case scenario for the US economy is now a recession. That's the best case scenario. So I think the Fed has made a mistake. Not that I like central banks. I don't think there should be central banks. But they should have kept cutting rates. Things would have been better now, I think. But the Fed always looks at the rear view mirror because they look at CPI. They don't look at M2, believe it or not. And yes, you'd think central bankers would look at those kinds of indicators. But the hubris is so huge that they think they can control public perception or sentiment about inflation by saying that inflation is low, by having all these stupid measurements like PCE and CPI, and having the statistics office tinker with it. It's just complete nonsense, and that's why we always get trouble. And I think that's why gold and silver and even commodities like copper are telling us that there's trouble ahead. And by trouble, I mean the economy is going to falter, and the central bankers are going to come in again with the governments and stimulate like there's no tomorrow. And why do I say that? Well, because I've told you many times, maybe some of you who are new haven't heard of this, and it's another book that I've recommended many times, and I don't have it with me, but it's called Fiat Money, Inflation in France by Andrew Dixon White. You can look that up. You can find a free PDF. And this is the history of the French experiment with inflation back in the 1790s revolutionary period. And they started printing this currency that was called the assignat, out of thin air. Actually, it wasn't completely out of thin air. It was supposed to be backed by the property that they confiscated from the Catholic Church and from the French aristocracy. But that didn't even work. And the point of me talking about this is that the first issue of assignats in 1792, the French General Assembly was very concerned about it because they'd had an experiment with paper money back in the 1720s with John Law, and that ended in disaster. So they said, oh, we're just going to issue so much assignats, and that will be it. It will stimulate things and will kickstart. I don't think they used that term back then, but basically that's what it was. They expected it to kickstart the economy, but they found that after every issue, yeah, you got a sugar rush, but then everything came back down. And that's what's been happening here in the West, or even in China, because China has been stimulating as well. And I would say that one of the reasons global M2 is also making new highs or growing very sharply is because China announced a lot of stimulus back in September last year, and I even made a video about it. China joins race to the bottom as it announces stimulus. Is it any wonder gold has been doing so well, and a lot of the demand has been in China? I'm going to put a link to this video up in the description. So there you go. That's what's happening. And back to France, every time the effect of an issue of assignats waned, they came back with even more. And eventually the whole experiment collapsed. The currency failed. And by then, in 1796, Napoleon, a young Napoleon, took over and went back to gold. He would never... I think there's a very one or two exceptions where he paid with paper, but he would always settle his bills with specie, as they called it. Specie is just gold and silver coins. Yes, some people make the mistake of thinking that tariffs and oil, the price of oil, cause inflation. No, they're just a reflection of rising prices. Ultimately, the only people that can create inflation, is the government and the central bank. Because in the classical sense, inflation is the increase in the money supply, basically by counterfeit. Just think of what happened in ancient Rome when they added copper or base metals to the silver coinage, to the denarius. It inflated the money supply, but it diluted the value of the coins. Government can do it, but if you did it, you'd probably be there would be capital punishment. It's a crime to really counterfeit coinage. Of course, nowadays they do it differently. Up until recently, they still debase the coinage, but now they just do it by printing money. And only the banking sector via the central banks and governments can really do that. So yeah, just keep that in mind. They try to fool you into thinking that inflation has another origin, but it's purely the government with its agent central banks. They're the root of all the misery that it creates. Why is that? Well, it's just like stealing, really. It's like stealing, it's like fooling the public. And that's why this kind of stuff is not taught in schools nor universities, because as Henry Ford, I think, said, if the public knew about the nature of our monetary system, there'd be a revolution tomorrow. So there you go. With that, I'm going to wish you all a great day. Take care. Bye.